Well, damn, guys, Twitter just had earnings and it was absolutely abysmal. This is not a company that I'm normally invested in. I have no position in Twitter right now. I have no trades. I have no long-term positions, no options, nothing. However, the numbers that just came out of Twitter were absolutely horrendous. So I wanted to go through because it is a popular company that a lot of people, are invested in. And so I want to go over those numbers and kind of how terrible these were. So before we get into it, guys, hit the like button, subscribe to the channel, and let's get started. So overall, I will say that I don't like investing in social media companies. Facebook is like the only company that I would probably invest in that's considered a social media company. And in my opinion, they are so much more. However, when it comes to Twitter, when it comes to Snapchat, I'm really not a fan. I do currently have a position open in Snapchat for shares, but I'm totally not like it's not my forte and it's not something that I see a ton of longevity in. Not because I don't think that social media isn't the future, but I don't see a ton of growth within social media. Now, as far as Twitter is considered, this thing took a massive beating. Nearly 11% drop after earnings just came out 20 minutes ago. So we're going to go over those numbers, and they're pretty bad. So Twitter stock plunges on a user miss and low guidance. Remember yesterday we talked about this when it comes to Facebook. Users, daily active users, monthly active users, average revenue per users, ARAP. These are the most important numbers. And so when they miss when it comes to users, and especially too when it comes to their outlook, which was pretty bad, those things are never good. So the company reported revenue of 1.04 billion for the quarter, which was up 28% from 808 million year over year. Twitter guided that is expecting revenue to be 980 million and 1.8 billion in the second quarter. Analysts were expecting 1.6 on average, according to Refinitiv. I don't care about those analysts, but coming in much lower than expected, which is never a good sign. Twitter's total numbers of monetizable daily users grew by 7 million from the fourth quarter to 199 million, but fell shy of analysts' expectations of 200 million. So pretty bad. Sorry if that blew your guys' ear out, but pretty bad. Not the best right there. Let's get into the EPS and the revenue. So earnings came in at 16 cents per share adjusted versus 14 cents forecast. Revenue came in at 1.04 billion versus 1.3 billion, so just barely beating it. Monetizable daily active users is 199 million versus 200 million. The company reported revenue of 1.4 within this quarter, which is up 28%. Twitter also reported a profit of 68 million, contrasted with a loss of 8.4 million 1 year ago. Twitter once again guided that it's expecting revenue between 980 million to 1.8 billion or 1.08 billion in the second quarter. Analysts were expecting an average of 1.06. Twitter's total daily number of monetizable users grew from 7 million. We already went through that. Twitter's ad revenue, which this is important too. Twitter's ad revenue grew 32% year over year to $899 million, according to the report, with the total engagement growing 11%. The company said it's still too early to understand the impact of Apple's privacy changes on iOS 14.5, something I'm going to make a video on in the next couple of weeks. I want to make a video on iOS 14.5 privacy issues, problems with applications like Snapchat, Facebook, as well as Twitter. I'm going to make a video on that for sure. However, Twitter pointed out that its integration of Apple's SKAD, so SCAD network, enabled the company to increase by 30% of the total number of iOS devices it can reach with its mobile application promotion or map offering. So I'm going to make a video talking about these privacy changes in iOS 14.5, but overall, not the best numbers, right? From a revenue standpoint and from an EPS standpoint, not the worst, but you guys know as investors, that doesn't tell the whole story. What we really want to see when it comes to things like Twitter is going to be, daily average users growing. We want to see daily average user revenue growing, which we didn't see either, and we want to see outlook to be strong. Now, as far as social media companies are considered going into the future, I've said it earlier in this video, but I'm not a huge fan as an investor because I think, Facebook showed us a little differently yesterday as far as things are considered. But look at, pins, which did not do too hot past couple days. Let me pull back a bit here so you guys can see. But Pinterest took a massive sell off yesterday. Earnings weren't so bad on Pinterest. I didn't make a video on it because I didn't think enough people cared, but Pinterest earnings were not that bad. Snapchat earnings were not terrible. Honestly, they weren't bad. I thought that they were really good. But as far as social media as a whole is considered, my two favorite, besides Facebook, because I don't totally count that, would be something along the lines of Snapchat and Pinterest and then Twitter. But from a long-term standpoint, I don't really think I would be investing long-term into any social media companies at this point. I think they're all extremely overvalued. I think that they're going to have a ton of privacy issues in the future. I think that there are going to be more and more regulations on not only privacy, but the addiction that social media creates. And I think that the world is opening up more to understand how invasive technology, not only technology, but social media, how invasive that is to the user, especially in children, and that's not something that I like. I feel like there's a lot of risk in the future when it comes to social media companies, and I just don't think that the amount of risk that there is worth the potential reward. Because like I said earlier, I don't think you're getting Twitter, I don't think you're getting Snapchat, I don't think you're getting Pinterest at a fair value. Definitely not undervalued. So overall, I would definitely be weary if you were purchasing these companies. Now, from a short-term standpoint, if we take a look at Twitter, let's go back to them. You can see that we are at a pretty strong support at $60. So if we look at the 4-hour chart, if we break $60, it's going to be a pretty quick move down to 55. If we break 55, it's going to be a quick move back down to 45.39. So 45.39, it's not a bad price to actually get in, but I don't know if we're going to go that far. For me, if it does hit 55 from a trading standpoint, I might actually take a small trade potentially. But overall, I'm not a massive fan of this. The earnings were not good. And I'm going to put some more videos out tonight, probably on Amazon and Neo earnings whenever they are released. I don't think earnings for Neo actually came out yet, but we'll talk about that when it does. Overall, guys, thank you for all the support. If you want to get access to every single trade I take live as soon as I take it, live stream with me and my team every morning for the first hour of market open, get access to our Discord and our 60-hour course library, use the code Academy90. Use the link down below. You can start for $10 your first month. Guys, thank you for all the support. Big tech earnings season is over, but if you guys want me to continue to do earnings update videos, I can definitely do those. This channel, like I spoke about before, is going to be based more around long-term investing and fundamental investing. The second channel, Traders Helping Traders, is going to be based more around technical trading and daily setups. And then the third channel is going to be based more around business building, entrepreneurship, and long-term investing in real estate and a bunch of other things. And once I get that channel together, I will keep you guys posted and I will let you know about it. Thank you guys for all the support. Hit the like button, subscribe to this channel, and I'll see you guys tomorrow. Peace.